world's largest ad agency has cut its full-year outlook for the second time in 2 months. The chief executive, Sir Martin Sorrell, says he's surprised by the rate of the slowdown and that clients are turning exceedingly cautious. And he joins me now. Sir Martin, good morning to you. Thanks very much indeed for joining us. Second time in 2 months you've cut this outlook. How bad is it out there?
I'm not sure it's 2 months. I think 3 months, to be fair. I think if you look at the pattern of Q3, I mean, the sequentials for Q1 through Q3 are 432 in terms of like-for-like growth. So it's come down as we've gone through the year. If you look at the pattern of Q3, July and August were okay, but September was tough. And I think if you talk to clients, looking at about 2/3 of the S&P that are reported already on your own and other channels, they're down either against expectations or guidance. So I think something happened in September that we're all not quite sure about. And if you talk to clients, I think you'll see that pattern. Maybe not so much with FMCGs. And there were some bright spots. If I look at our own business, the UK, Asia, Latin America, Africa, the Middle East were better. If I look at it functionally, advertising and media investment management, direct and digital was strong. But generally, I think there's much more caution post-September. 4 grey swans, as we put it. Eurozone, although I think kicking the can down the road has succeeded a little bit there. Middle East, obviously very unpredictable and quite depressing. Hard soft landing, we think it's soft landing in China, indeed other BRIC-type markets. The last issue, which I think when I was in the US in Chicago last week, the Business Council was, I think, quite concerned about, or more concerned they have been to date this year, is the US deficit, fiscal cliff, and borrowing, and the 16 trillion that's sitting on the US balance sheet. And post the election, if we have a deadlock or a gridlock, is that going to be dealt with? Will there be some sort of Simpson-Bowles type agreement that will get us out of it? So I think all that coming together has made people cautious in September and for the rest of this year. And it doesn't bode well, to be honest, about what's happening in 2013, because clients will go into that year feeling quite cautious.
So it's lack of clarity going forward. I mean, you are still forecasting full-year record results, but it's just a lack of clarity in the short term that we're looking at?
Yeah, well, I think it's very difficult to understand why people have suddenly, not so suddenly, because you have seen that erosion, but there was, I mean, when we were talking to the ECB last week, there was a surprise even at the bank at what was happening in September and more recently. And it is difficult to understand why. And I've asked several clients why they saw deteriorations, and they can't explain it, other than I think it's the accumulation of all these things. Now, if there was a quick resolution in the US post the election, I think that would be clarification. We've seen Warren Buffett yesterday in Washington say that there was a global slowdown and things are difficult. This morning you see a profit warning from Daimler, you see Credit Suisse's results. It's just another day in this. So I think the tide is moving in that way. But I think we have to see a resolution of some of the issues that people are concerned about. Having said all that, it's very different to 2008. Corporate balance sheets are very strong, 2 trillion of cash sitting on corporate balance sheets, relatively unleveraged. Government balance sheets are still stretched. Consumers' balance sheets are better. So the overall picture is better. FMCGs, you see Unilever's results this morning, which are good. So I think in the mass consumer area, it's better. But there's still a degree of caution out there.
What would be, for you, the key growth area, whether it be geographical or business, that's really driving your company at the moment?
Well, I can't wait for Western Europe to get its act together. And a lot of our clients believe that we will see, there's a lost decade in Europe and we're halfway through it. I think the Chancellor at the Conservative Conference said we have to wait to 2018 before things get better. The UK, by the way, we think is bumping along the bottom, not green shoots. So I can't wait for that. Our horizons are much more short term. And what we're looking at is Asia. We're looking at Latin America, Africa and Middle East, Central and Eastern Europe, although that has slowed in the last quarter. So Russia, I'm very bullish on. So it's BRICS and Next 11, and it's direct and digital. The digital area, whether it be display or search or video or social or mobile, those 5 areas which we see growing, for example, with Google, lesser extent Facebook, still growing there, with Twitter, and with all the other new media and new digital opportunities we have. We see those as being opportunities. A company like Pinterest that we were with at our strategy session in Silicon Valley a few weeks ago, also growing great. You look at applications like Airbnb, in the sort of rental sectors. I mean, all these applications are driving business and interest from our clients and connectivity and a dialogue with consumers.
And what about the flip side of that? Are there areas now finally of your business that you're moving out of because it's old hat or it's too traditional, that you're just saying that's had its day?
Well, you can't separate these things. Our businesses are interlinked. I mean, one of our clients, a couple of our clients, are restructuring in Western Europe, but you can't cut off those. I mean, the prospects in Western Europe, less so the UK, less so Germany, but France, Italy, Spain, it's tough stuff. And you can't do very much about that because they're part of an integrated system, and you can't cut off one part of it and ignore one part of it. You have to continue to invest, albeit at lower levels, and you can't increase your capacity just like our clients. So we have this bifurcated strategy where we and our clients are investing in capacity and brands and growth in the fast growth markets, what we call planet growth, and we're restraining capacity, holding capacity, maybe even reducing it, but investing in brands and maintaining an increasing market share in what we call planet no growth or planet slower growth. So the world is a very different place depending on where you're looking at it, both geographically and indeed functionally.
That is it for now. My thanks to WPP CEO Martin Sorrell, speaking from the London Stock Exchange studios. More on Economy 2012 series available on demand. Do check out our interview with BASF CEO Kurt Bock from earlier today. I'm Nigel Stevenson. This is Reuters.